resume the recording. I believe we have some great information that we're about to receive by Mr. Kevin Ards, who is one of our affiliates actually with Brooks and Davis Real Estate Firm. So, you know, he actually dabs into a couple of things, what I'm hearing just from talking with him, that I believe is going to be some great information for us to, one, educate our clients, but not only that, us ourselves as realtors and entrepreneurs, how it is that we can benefit from these products and services. So I don't want to hold us up any longer. Kevin, if you could go ahead and just give us a quick introduction as to who you are, what it is that you do, and you know, what information we'll be receiving from you today.
All right, appreciate it. My name is Kevin Ards. I am a educator of insurance. The main insurance that I actually kind of cover is life insurance. With life insurance, there's different variations of it. I mainly focus on mortgage protection, term insurance, universal life policies, as well as annuities and final expense. What I really want to talk about today with you guys is mortgage protection. It's something that has been around for a while, has changed throughout the years, primarily prior to 2010, mainly, your lender could actually offer you mortgage protection. But they kind of went back and changed the industry after 2010. And basically what they did is your mortgage lenders actually kind of offer you something like an accidental policy now. So when you sign your mortgage, it's kind of like an accidental policy. And the reason why they kind of changed it because they wanted to make the client or the mortgage owner be able to have that flexibility, what they can do with it. And the things that you can do with mortgage protection now, it works like a life insurance, and it actually works as something else. First, with mortgage protection, it'll work like a life insurance in a way of if you pass away, God forbid, it will pay that entire mortgage off. So whatever your face amount is, so the amount of that policy, your beneficiary will get that amount. But also in mortgage protection, it will cover you if you ever diagnose with something like if you have a heart attack, you get diagnosed with cancer, you have a stroke, you get ALS, dementia, organ failure, kidney failure. If you can't perform two of the daily living activities like you can no longer bathe yourself, feed yourself without assistance. And then as well as if you get a terminal illness and you get less than 12 months to live, some carriers is actually 24 months. So it allows you to do more things with these policies now than we did in the past. Why is that? Because more people are getting diagnosed with cancer. Why? Because we're going to the doctor a lot more frequently. More people are having strokes and heart attacks. Why? Because we have stress in our life. Also, we have, right now we're going through this pandemic. So a lot of people they're more cautious and they're being precautious, I should say, because they want to make sure if anything happens to them that their family is protected as well as themselves. Especially when you purchase a home, most people, that's the largest purchase they ever purchase in their life. And probably for the longest when you think about it, you're doing a 10-year, 15-year, 20-year, 30-year mortgage. So people want to protect that in a way. So what I want to do first is kind of, once I kind of gave you the spiel, I just kind of want you guys just to watch this quick video. It's about 5 minutes long, and it's going to be just a little something for you guys to kind of put all of what I just informed you into focus.
I'm Amanda Thomas.
And I'm Eugene Carson.
And this is our living benefit story. We live in Riverside, California. We have 5 kids together, 9, 8, 2, and 1. And 1 on the way.
My name is Mark Peden. I work with Financial Concepts of America here in Anaheim, California. So I met Amanda and Eugene shortly after they purchased a home loan with our living benefit program. I felt like I'm invincible. I'm, young and strong. But like she said, we bought our first house together and we have children now. And when I got that letter in the mail, I said, we need to give this guy a call. So with living benefits, it allows the insured individual when catastrophe strikes and they have a sickness or an accident, they're able to accelerate their death benefit and use those proceeds now rather than waiting until they die.
I was like, okay, we need to get this because cancer runs in my family, and I thought it would be a great thing to have.
I'm 33 years old, healthy. Well, I guess maybe we'll use it later in life.
Amanda was actually approved preferred, which means that she's in better health than average.
We knew it was there in the back of our mind. We never thought about it. We just made our monthly premiums.
I basically found out we were pregnant about a month later. My first symptom, I remember it like it was yesterday. We're sitting at the table, all three kids then, and we were eating, and I took a bite of food, and I choked like I'd never choked before. I thought to myself, I'm just gonna take smaller bites. And then as time progressed in the weeks, and my neck started to swell up, and the nights too, I would wake up gasping for air. I went to work and my heart was beating real fast. I thought I was having a heart attack. They took me down to the ER when I got to the floor. The doctors came in, they told me I have a mass in my chest and you're gonna be wheeled up onto the oncology floor. I'm like, okay, well, I have cancer.
So approximately 11 months after the initial policy issue, I was having a meeting with Eugene, and at that point he had told me that Amanda had been diagnosed with cancer.
I was, obviously, shaken up about it really bad, and I knew God was on our side. So I was like, let's just go and battle this thing.
When they explained the treatment, like, oh, you have to be admitted every 3 weeks for 6 days for 6 months. I'm like, well, okay, that means I'm gonna be away from my son. 4 hours a day visit is nothing compared to a 24-hour day and night feedings. And it was hard because, I was breastfeeding and I had to stop. And, that hurt a lot too because we worked so hard for that. I was out totally on medical leave because of the cancer for a year. When my job dropped me from the insurance, we're not issuing you a check anymore. You have no more PTO. You have no more sick time.
Most people don't realize how devastating a critical or chronic illness can be. We not only lose our income, but now we have the cost of care, co-payments, deductibles that can be significant. And until something actually happens, most people don't realize how expensive it could be.
We have the mortgage, we have the car payments, we had private school tuition, we had credit card bills, car payments, groceries, okay? And then when it was time to actually cash in on that life insurance policy and to see whether or not everything Mark represented was going to come true, it came true. And it came true above and beyond our expectations.
We had a policy with a $405,000 death benefit, and she received a check for $343,000 after not even owning the policy for a full year.
I thought it was going to be a real low amount, but no, they really paid huge amount.
We all know stress can kill you, so financial stress is huge. And to have that taken away in a sense when you're sick at your worst is a nice feeling. Probably the best feeling, you know what I mean? It's the best feeling.
So the living benefits, it came in right on time. All that worry, stress, it just evaporated instantly. That's the power of the living benefits. It's very powerful because you're able to focus on what's important, which is getting your family back on track and keeping your family healthy.
I'm so thankful for the life insurance policy. I'm thankful that chapter in our lives is behind us.
So don't just get one policy for your family, get a policy for every member of your family. All 4 of our children have policies. And Emma, she's in here. We're going to get another policy for Emma. So everybody in your family needs a policy. Go get a policy today.
Righty. So let me kind of break it down to you how it actually works. Like I mentioned, it works like a life insurance policy as well. So let's just kind of do some simple numbers. If it's $100,000, the amount of the policy, so the face amount. So if you pass away, of course your beneficiary would get the full $100,000. But also, let's say if you diagnose, for example, cancer, what we would do, we would just file a claim with the carrier. Then the carrier will come back and they'll offer you an amount that they can accelerate it at. When we mean accelerate, that means you have access to it. That means you don't have to die to actually utilize that policy. So let's say if you come back and the carrier says that, hey, we'll offer you an acceleration amount of 80%. So what they would do is I'll cut you a check for $80,000. That does not go to your lender. That goes to your bank account, your pockets. You can do whatever you want to do with it. If you want to just pay on you, put 10,000 towards your mortgage, you can. That you can just keep your mortgage going because you're going back to work. You're just going to be off for X amount of time. And the remainder you can just put in your bank account. So that's the great thing about mortgage protection. Also, it's portable, which means if you own your home, you sell your home, that policy actually goes to you. It's not tied to your actually house. You can increase the face amount. Let's say if you have a home for $100,000 and then you go and you purchase another home and it's now 200, so you doubled it. So if you want to increase your face amount, you can. There's a lot of different products that you can use. If you want to, the basic products is what I kind of talk about. It's based on a term. It's basically like term insurance, term life insurance, because it can go 10, 15, 20, 25, or 30 years. The longest you can get your mortgage is 30 years. So if you want to just go in and just take out a 30 years mortgage, then, excuse me, a 30-year policy, then you can. What if you pay off your house before the policy is completed, before the 30 years? That policy is still in force. So just because you paid it off doesn't necessarily mean you no longer have that policy. Another policy that you can use is basically what we call a index universal life policy. It has everything that you have, like the basic mortgage protection. So all of the coverage of, like, if you have those have a stroke, heart attack, cancer, you can't perform, you can't do the daily living activities. It's all of that's included, but it also builds cash value and wealth transfer. So that's another great policy. I write a lot of those for a lot of young kids because why? Because you can get it as young as 6 months. I have a 12-year-old daughter. Her policy is $300,000 and I pay $93 a month for it. I will pay that for the rest of her life. It will never go up. That's a fixed rate. And if you know anything about life insurance, the older you get, the more expensive it is. And plus, her policy is actually building cash value. By the time she's turned 70, her policy would be worth $1 million. She can actually take cash out of that policy tax-free. So I basically put her in one of those policies because it was actually cheaper for me to get that policy than actually buy her a whole life policy, which is going to cost me the same amount for only $25,000. So I actually got her one for $300. So there's a lot of different things that you can do for mortgage protection if you want to protect your family and if you want to keep it longer than the 30 years. Like I said, it's portable, it's transferable. Each particular person in the house has one. It's not tied to one particular, like a couple or anything like that. And the main reason why we write different policies for everybody, because if you get an illness, you're going to have access to your policy, and then say if the spouse or the children, that something happens to them, they can access their own policy. That way, you're not, all of you guys, or everyone is not just actually pulling from one particular policy. Everybody has their own specific policies, and it's very affordable. I write for all of the carriers that actually offer mortgage protection. There's something for everybody, even if you have illnesses and things of that sort. It's not expensive what people think it may be. Definitely, the younger you are, the cheaper it is. That's with anything, especially with this pandemic and everything that's going on now. No one can pretty much dictate what's going to happen to them every single day. When you wake up, you never say, today is the day I'm going to die. Today is the day I'm going to get diagnosed with cancer. You just want to make sure if something does happen that you are protected. With that being said, any questions out there?
Yes, I have a question. So what's the, I know that you said that once you get older, it's more expensive, right? So is there like a range? Okay, so say I'm 39 and then, okay, once you hit 40, it's gonna be a different, I mean, extreme jump, or what's the,
Okay, how about we do this?
all right?
Okay. I'm gonna share my screen with you and I'll let you see for yourself. We're gonna do you, Miss Jessica. What's your birthday? You muted.
11/30/1981.
Oh, Scorpio. My birthday is on November the 4th.
I'm a Sag. Come on.
Oh, you're a Sag. I'm sorry.
Yeah,
You
I'm a
missed
Sag.
by
You
a
right
couple of days.
before me.
Yeah.
We got some
November,
Scorpios on here though. I see Margaret's on here.
November 30th. What day?
1981.
You're a November baby, so we like.
Mm-hmm.
So one thing about insurance, everyone, women are typically cheaper than men, mainly because they go to the doctor before we do. Just being honest. So that's why they actually are cheaper. And I'm just gonna keep everything pretty much the same.
Okay.
So $250,000 face amount. This is what your payments would be. 10 years is $56 a month. 15 years is $65.19. 20 years is $70 a month. 25 years is $79.41, and for 30 years is $99.53. That's for $250,000 for a female or your age.
Got you.
And so just to kind of show you the difference, let's say if you was born in 1991, so I made you 10 years younger. See, the difference is almost half. 10
Yes.
years is 37.41, 15 years is 44.84, 20 years is 44.84. It's basically 15 and 20 is the same thing. 25 years is 47.69, and for 30 years is 56.44. So that's a difference of 10 years. So that's when I say the older you get, it does start to increase as you get, you start jumping to your different decades. It starts to, that's when you really see the significance of the jumps in the pricing. Yes, Miss Shante, I see you have your hand
Perfect. Go
up.
ahead and unmute, Chante.
Yes, I have a question.
Go ahead.
Because it's almost time for my mortgage policy to be up, and so I want to make sure that you put your contact information in the chat. And also, but I do have a question.
Go
What
ahead.
is the purpose of, if I get like a life insurance policy and then I get one for my children
Mhm.
and my significant other, but like if anything happens to me, my it'll go to my children. So is it necessarily that they have one, or is it good to just have everybody have a policy?
Because this is a couple of things. When you have your traditional life insurance, right? If you have a life insurance policy,
Mm-hmm.
when do you get to use it? You don't. You
Upon
don't.
death,
Yeah, that's right.
Okay,
You don't even really get
okay.
you don't get the benefits. So your beneficiary does. So you want to put a policy in each event in each one of your in everyone's house, because if you get cancer, then your husband has a stroke, and then for some reason something happens to your kids or anything like that, everybody has their own policy. Okay, and so yes, you're gonna have your beneficiary. So God forbid, if you do pass away, your husband probably is gonna be the primary. So that amount will shift over to him, that policy. So if it's $100,000 face amount of that policy, it'll go to him and he can just pay the mortgage off, if that makes sense.
Okay, and I have another question.
Okay.
Is there a penalty for, like, if someone has, like if someone's diagnosed with cancer
Mhm.
and they want to use that policy? I know that you say that they can use it. And what if there is, like a national disaster?
Mhm.
Will there be a penalty because the person used the money before? As well as, then you're asking for assistance if there's a disaster that happens.
So for
Penalty
example,
Mhm.
let's say in some carriers, let's say you have $100,000. We're gonna keep it simple. You file a claim, and
Mhm.
so you get a claim for, they offer you a settlement of 50%. So you take $50,000. that remaining $50,000 will just stay in, it'll just transfer over. So instead of paying the 100,000, you just paying for 50,000. And let's say after that, you have got diagnosed with cancer again, you can go back and access that. It just depends on what carrier that the agent writes it with. That's a great question, because some agents would not disclose. I can tell you, Foresters Financial, if I write this with for somebody, once they use that policy is no longer it is no longer valid. But if I write it with Mutual Omaha, I can keep that client can continue to go back. So there's different carriers out there that do different things. What I like to do is just sit down with my clients and I ask them, you know, hey, what are you mainly looking for? Are you mainly looking for cash value, or are you just looking for coverage? Also, one thing, and then I would tell anybody, get a policy that you can actually afford. A lot of people say, hey, I want $1 million policy, and then it's $300 a month, and then they can't keep it, and then the policy is no longer in force. So you want to get something that you can keep and then you can afford, because when catastrophe hits, you want to make sure that you are covered.
Okay.
But hopefully that answers your question. What other questions? That's a great question, though.
Okay, thank you. I know I was just trying to weigh the difference because I have it on my other job. I have life insurance policy, but the max they give you is like $40,000, and I wanted something else a little bit more than that, like you said, $100,000 policy. And they would not allow you to go over that amount. So that's why I was asking that question, because would it be beneficial on your job, or maybe just stop it and then just try to get another policy?
I'm gonna talk.
I'm just trying to weigh my options.
Okay, now I'm gonna put on my nephew hat. You can never have too many policies. I have multiple policies.
Okay.
So each one does different things. I will tell you also, if you have a policy on your job, I do highly recommend that my clients have policies outside of their job, because what happens when you lose that job?
Right. That's my question.
You no longer have that. So you always want to have yourself covered outside of that, but you can never have too much coverage. And I tell anybody that. Each one of my policies, for example, I have one for my daughter, I have one for my spouse, and I have one for the house. Each one does. So if something happens to me, I know my spouse knows which one of these policies to utilize it. And then plus all of them have living benefits. So which means if I ever get sick, I can just go pinch for me. I can file a claim with each one. That's just me being in the insurance. So I just know how to do that. So that's just my main, I'm here to educate you guys on it, because a lot of people don't know that. Like I said, it just depends on, I have some clients that, like, for example, you have $40,000 and you say, hey, Kevin, I want to get to 100,000. So why don't you just start, if it's just to make sure it's affordable, why don't you just get you a $60,000 policy? And that $60,000 a policy will allow you to still access living benefits. And then, God forbid, if something does happen to you, you still got that $100. Yeah, 100,000. Okay. So that gives you different ways that you can actually look at it from different things. I have some clients who decided they have multiple policies, and they were like, hey, they just regular policies, so I can't access them if I die. Unless I die. So they're like, hey, how much will it cost for me to just get one big policy that I can put with this? And that's what I've written a couple of those. I can write it up to $12 million.
Oh, wow. That's a lot.
And so yeah, so one quick thing is a lot of our policies are simplified issued. If you don't understand that, which means there's no blood and urine test. When you do a blood and urine test to get a policy, that's called a fully unwritten. That means you have a nurse come out, or you go to a place, they draw your blood, they take your urine, they get all your vitals. So there's no hiding it. So a lot of time it can be cheaper because you can't hide it. If you ain't been to the doctor in a while, you might not want to have a fully unwritten policy, because you might find out some things about yourself.
Okay.
And then your rate might go up, because it's like, hey, you got some diabetes that you haven't been treating. So a lot of people got to think about it from that aspect of it. But that's a great question. What other questions do you have?
So you said the alternative to the fully underwritten was a simplified, what was it, simplified?
Simplified underwritten. So this is a simplified policy right here. This means there's no blood in urine. The only thing that we do is we ask you a couple of medical questions, your height, your weight, if you smoke, what's your history, kind of like you're going through a questionnaire when you go to the doctor. It's pretty much all it is. And then we submit the application. When you have a fully underwritten policy, that means you get those same questions, but they will draw your blood, which they run it, and they'll find out, hey, what's your blood sugar look like? they find out every single thing, and then your urine. So I tell all of my clients, I'm like, hey, if you're not 100% sure that you're healthy, I try to steer my clients away from those, mainly because I don't want something to pop up that you may not even know. Quick example, I had a fully underwritten policy, and I mistakenly went and ate Chinese food before I went and did it. My numbers was off, so they had to go back and redo it again. So I had to get poked on again, because I just wasn't I made it in sense, and I know better, but I had just forgot, and it just threw my numbers off.
And is it really even that big of, is it that big of a price difference? Say you're fully healthy and you're doing the underwritten, they don't find anything.
Yeah, they can come back and give you a lower rate, but a lot of people just don't want to go through the hassle of like drawing their blood and doing. I mean, I don't know about y'all, but I don't like getting poked on. I tell them they make me a pin cushion every time I get my blood drawn, and so I'm like, really? I was like,
Gotcha.
What other questions do you have for me?
Well, if you don't get, I have a question about the payout. What if you don't get poked on and something happens within like a year? You fall out, you have a heart attack, or you're stroke. Does that affect your payout?
Nope. Your policy actually is enforced the first day you make your first payment. So there's no waiting period, if that makes sense. A lot of policies.
But if they find out a year and a half later that there's an underlying issue, that doesn't affect the payout?
No, you're already approved. You're already approved, if that makes sense. So like if you come back and you write your simplified issue, let's just say you got approved. And I had this, a lot of people ask me questions, and especially I get this from the smokers for some reason. A lot of people say, hey, what if I don't tell you that I smoke? I mean, if I say I don't smoke and then they, you go to the doctor and say you smoke, can they fight that claim? Yes, they will fight that claim if that's the question, the way you're asking the question. So if you're being dishonest, I mean, that's why when you submit those applications and things of that sort, as an underwriter and an agent, that's for me to verify. When I'm signing my name on that application, I'm verifying that everything you're telling me is true, and vice versa. So
what about those diabetes? Those diabetes you may not know about.
Then you simplify the issue, if that makes sense. I'm talking about the people who are just kind of like, really, there's some people, but I can tell you, whenever you do a simplified issue or any kind of life insurance, they run your MIB report. So if you don't know if you don't know what an MIB report is, it's basically it's a medical report like your credit report.
Yeah. Yeah, they're gonna,
so you can't hide.
They're gonna find out. Yeah.
So it's a lot of applications that come back to me, and for some reason my clients don't like to disclose every single thing to me. And then they come back, and the underwriter shoots me a little email to say, hey, this person has such and such and such and such and such and such, because they run your MIB report. So it's pretty much like a credit report. Whatever you go to the doctor for, and you're prescribed, it's on there. So even if you can't hide it, because there's a lot of people, when I'm going through the application, it's asking you about your medications. And so some people don't want to tell me that, like, hey, they were prescribed this, they just don't take it. So since they don't take it, they don't want to put it on the actual application. And sometimes those medications can actually be kick out, which means it's an automatic decline. Just because you prescribed it, it needs to be, you have to put it on there. They won't disclose it. They be like, no, I don't take anything. But then I get an email from the underwriter saying this person has a medical prescription history of X, Y, and Z. I'm like, they didn't tell me. So that's a great question, man.
So there's no clauses in there, nothing in the fine print, because you have the people that don't go to the doctor, the people that don't have health insurance.
Yeah, they it asks you if you like even one of the questions on the application, it'll ask you if you have a primary physician, when the last time you've been. A lot of times they kind of frown upon people. It's a lot of questions like if you haven't been to the doctor in like 18, like 3 years. Because that's a great question. They don't know what's wrong with you. You could have an underlying condition or something going on with you. You just refuse to go to the doctor. So sometimes a carrier is kind of hesitant on,
Mhm.
approving those. And they might ask you to go through, they can send back if I try to submit a simplified issue, they may come back and say, hey, this client needs to actually do a fully underwritten
Mhm.
application because or a product or find this product for them because of that.
Yeah.
And especially with and we're kind of running into it a lot now because of COVID, because a lot of people didn't go to the doctor during COVID because of the pandemic, and so now people are starting to get back. So you really kind of see it with the people with the diabetes, because they're not really kind of they weren't going to the doctor as frequently as they should be, but now the carriers are being a lot less laxed on it. They're saying no, you need to have a checkup.
It makes sense because, hey, again, nothing is for free.
Yeah.
You're not just gonna get a cheap free policy.
Yeah. So, what other questions you have for me? These are great questions, by the way.
No, that's it. I think you clarified a lot of stuff. Thank you.
Uh-huh. I think Adrian. Oh, that's my hand. I thought that was somebody chatting. Did somebody chat?
No, I didn't see. That was Margaret who just said she's November 19th. She shouted at her birthday. She's a
Okay. Hey, we Scorpio. My mom was so that's kind of crazy. I love these Scorpios. My spouse is a Scorpio, and my mom is a Scorpio.
Oh,
So I
nice.
got Scorpio women around me. Woo, bless me.
Well, I used to want to stay away from Scorpio, but then my son is a Scorpio. So
Okay. And then also I wanted to talk to you guys. So the last thing is just kind of, I gave you guys a brief kind of education on it. And then it's a great way. You guys are actually in front of the clients. So it's a great way that we can kind of partner together and things of that sort. Because you guys have these relationships with your clients already. And so they're going to look to you as like, hey, what else they need? Because a lot of people are totally unaware of mortgage protection. Usually the way mortgage protection kind of works is a lot of times when you purchase or refinance your home, and if you ever purchase or refinance your home, you're going to know what I'm talking about. You get all these lovely letters in your mail, and then you start receiving these phone calls. And that's basically what mortgage protection is. You'll start getting inundated with a whole bunch of them. But it's just talking about protecting your homes. It's a great way for you guys also, if you want to obtain your life insurance license, because instead of having them reach out, sending them my way, you can actually do it. I'll be honest, the average sale on the low end per application I write is about $500. So typically most people are buying a home, it's usually a couple, so you can potentially earn an extra $1,000 off the top, and then you build on that rapport, because homeowners typically know other homeowners. So it can spread like that, because once you understand how mortgage protection work in the carriers, it's really just a networking thing that you like, and have your clients, they kind of just network for you, because they'll start talking about it. And just like that story, I mean, people get it and they think like, hey, I never use it. But I tell anybody, we'll protect our laptops, we'll protect our cell phones, heck, we'll protect our cars, but we will not protect our lives. There's more people out there that don't have any kind of health insurance. And a lot of people will be like, oh, I don't want to spend, like you just saw, if you were 30 years old, it's $37 a month. You wouldn't believe how many 30 and below will not have coverage. They just won't do it. They don't think it's going to happen to them. And I'm like, well, unfortunately, we never thought that there would be a pandemic, but we're in one in 2021 and still going on. So it's a great thing. If you guys have any questions, if you want to have coverage for yourself, if you want to learn more about like, hey, how can I get in this and do this as well? Let me let me put my contact information in there, and I'm gonna also tell you guys as I'm typing. My direct contact is area code 214-498-2284. I can be reached at Kevin Ards, KEVINARDS @outlook.com. So I'll put all that in there.
And I also just want to let you all know that if you look at the flyer in the group chat in there, I've put his card on there as the image, so you can also have that as a reference.
Oh, thank you, man.
Absolutely.
So yeah, definitely. I mean, if you're thinking about getting covered, if you need to be covered, if you just have just general questions about life insurance in general, I'm definitely here. The funnest thing and why I'm doing this is just to educate people about insurance, because a lot of people are totally unaware. I talk about it every single day. A lot of people don't, well, most people don't want to talk about death. I was telling Jess at the beginning of the call that even my parents, I'm in the industry, and it's like pulling teeth for me to, I had to finally get it out of them probably late last year. Like, where's their policy information? If the house, if my dad passed, what happens? If my mom passed, how do we go forward? How do you pay the bills? No one really wants to talk about those things. They don't want to talk about death, but death is happening every single day. That's something that's guaranteed to all of us. So why not protect their family and make sure that, when that does happen, that they're taken care of. Any other questions out there?
I don't see any that have come through in the chat, Kevin. I mean, I really think this was a great training. I mean, you've got my wheel spinning, and I'm thinking of ways that, the ways that I need to protect myself, as well as even interested in it from a, maybe even thinking about getting a license, or even spreading that news to other agents. We're always looking for multiple streams of income and ways that we can grow. And that Margaret said, great training, and it really was. So I think it was right on time. Such a time as this, with everything that's going on, this is information that we do need there. So if we don't have any other questions, Kevin, you've got your information in the chat there for everyone. What we will do is make sure that we get this training uploaded to YouTube and sent out there to you all. So if you need to backtrack to look at any of the information that you may have missed, then do so. Kevin, you're connected with us in GroupMe. You're on our Facebook as well, in our private Facebook chat, I believe. So, definitely reach out to Kevin. He's a part of the family. So this is someone that we definitely feel is the perfect person to provide us the information that we need in this aspect.
Great. If anyone wants to stick around, if you have some personal questions, you can ask me, or if you want to chat offline. Jessica, I don't know if you're going to continue to record or you just want to stop it.
No, we're going to go ahead and end the recording.
Okay.
Go ahead and get it uploaded. But if you guys, they have your information, shoot them a text if you need to set up some time there with Kevin, or if you need to get with them right after this training, then definitely reach out to them.
All right. Thank you all.
Thank you, Kevin.
Thank
all
you.
Have a great rest of your day. We'll see you for the next one. Take care now.
Thank you.
Bye-bye.
Bye-bye.